You've probably heard about Bitcoin, but the idea of getting started might feel overwhelming. If that's the case, then don't worry, because you're definitely not the only one. Many other people feel the exact same way. So if you're looking for some clarity on how to get started with Bitcoin and do it right, then you chose the correct video. Hey guys, welcome to the Bitcoin Experience. In this video, we're going to break down exactly how to get started with Bitcoin. I know it can feel a bit overwhelming at first, but trust me, once you understand the basics, you will be on the right track. And by the end of this video, you'll know exactly what steps you need to take to begin your Bitcoin journey without any confusion. Now, if you get value from this video and you find it useful, it would help me a lot if you gave it a like, subscribe to the channel, or leave a comment down below. And with that said, let's get right into it. First of all, you need to understand that Bitcoin is not a get-rich-quick scheme. If you're looking to buy low and sell high to make a lot of money really quick, then Bitcoin is not the tool for you. Instead, Bitcoin is a savings tool that you can use to both preserve and grow your purchasing power over the long term. Because of that, you need to approach Bitcoin with a long-term mindset. And when it comes to Bitcoin, long-term means at least 4 years. That's because Bitcoin's price is very volatile over the short term, both to the upside and the downside. And that's because Bitcoin also tends to follow a 4-year cycle. But over the long term, it has trended higher and higher despite multiple 70% or more price drops. Here's a log chart of Bitcoin to help you visualize that. And this is why I always say this to the people who want to start buying Bitcoin. If you're not ready to save in and hold Bitcoin for at least 4 years, then don't bother doing it for even 4 minutes. Historically, everyone who saved in and held for at least 4 years has come out ahead. I actually did a video showing how even if you had started at some of the worst times, you would still be up at least 80% after exactly 4 years. I'll link that video in the description. So when it comes to Bitcoin, patience is key. And that's something you should have even if you plan to invest in stocks, indices, gold, or any other asset. Now, Bitcoin can be intimidating at first, so it's important not to overcommit right away. Many people have gone in too big, too fast, and ended up getting wrecked because they didn't fully understand what they were getting into. The smart way to begin is to start small. By small, I mean allocate between 1% and 5% of your free monthly cash flows or your liquid net worth. For example, if your liquid net worth is $10,000, you can allocate between $100 and $500 to Bitcoin. Or if your free monthly cash flows are, let's say, $500, you can save between $5 and $25 per month in Bitcoin. If you're just getting started, I know it's easy to get excited and allocate more. But the truth is, Bitcoin's volatility can catch you off guard, and you don't want to panic sell when the price drops 20%, 30%, or even 50%. So just like with any other investment, you want to get comfortable with the asset first before committing more to it. Starting small gives you time to study, understand, and build conviction in Bitcoin. The more you learn, the more you'll see Bitcoin's long-term potential. But you have to start somewhere, and starting small is the best way to build that conviction without putting yourself in a vulnerable position. Once you get comfortable and start seeing Bitcoin's true potential, you'll feel more confident and you'll naturally grow your allocation. But don't rush it. Slow and steady wins the race here. In order to understand and gain conviction in Bitcoin, you'll need to do some studying. Some of the best resources that I can personally recommend are books like The Bitcoin Standard by Saifedean Ammous, 21 Lessons by Gigi, Broken Money by Lynn Alden, The Price of Tomorrow by Jeff Booth, and Layered Money by Nick Bhatia. There are also many online resources like articles or podcasts, but those books alone will provide you with a lot of great information. So when you're ready to buy Bitcoin, I would highly recommend you use a Bitcoin-only platform. Some examples include Strike, River, Relay, Amber, Bull Bitcoin, and many others. The reason why I recommend those platforms is because they are designed and built with Bitcoin in mind. I also like them because they offer simple and secure ways to buy, hold, and transfer Bitcoin. Some of them offer free on-chain withdrawals or no-fee DCA options, which is amazing. On the other hand, crypto exchanges, aka shitcoin casinos, will bombard you with all sorts of cryptos to gamble your money on. Some examples are Coinbase, Binance, and many others. If you have no other option, then feel free to use them. Just don't let them distract you with all the nonsense from Cryptoland. So once you open your account, set up a DCA, which means dollar cost averaging, if the platform offers that feature. With a DCA, you'll be able to automatically save a fixed amount of money in Bitcoin regularly. For example, $10 per week. Now, each platform offers different DCA intervals, but some platforms offer the ability to DCA into Bitcoin hourly, daily, weekly, or monthly. If the platform you use doesn't offer a DCA feature, you can still DCA manually. The beauty of DCA is that you don't need to time the market. You just need to stay consistent and do it for the long term. Once you've accumulated a meaningful amount of Bitcoin, it's time to get real and get your Bitcoin off the exchange. Some people do this once a week, once a month, or whenever they want. There really is no one-size-fits-all approach to this. The key is to withdraw your Bitcoin from the exchange once you have an amount that you don't want to risk losing. That's because if your Bitcoin is sitting on an exchange, it's not truly yours. Exchanges are centralized, hackable, prone to collapse, and they can freeze or restrict access to your funds whenever they want. The people who held Bitcoin on Mt. Gox, FTX, BlockFi, Celsius, and many other exchanges learned this lesson the hard way. That's because to own Bitcoin, you need to withdraw it to your own self-custody wallet. A self-custody wallet is one that only you have the private keys to and gives you the ability to move your Bitcoin. You can start with either a mobile wallet on your phone or a desktop wallet on your computer. Some good options for mobile wallets are Green Wallet, Blue Wallet, and many more. In terms of desktop wallets, you have Sparrow, Blockstream Green, and a bunch more. They're easy to set up and a great way to start taking self-custody of your Bitcoin. Because not your keys, not your coins. This is the golden rule of Bitcoin security. By taking self-custody, you're ensuring that your Bitcoin is safe and accessible only by you. As you get more comfortable with Bitcoin, the next step is to secure your Bitcoin in cold storage. Cold storage means keeping your Bitcoin private keys offline to protect them from hacks and other online threats. Mobile and desktop wallets, also known as hot wallets, are great for everyday use. However, because they're connected to the internet, they're more exposed to risks. These wallets are perfect for smaller amounts or regular use, but they don't offer the same level of security as cold storage does. Cold storage is the next level of protection. The most secure way to store your Bitcoin is by using a Bitcoin-only hardware wallet like a Cold Card or a Jade. These are hardware devices specifically designed and built for Bitcoin security. They don't rely on an internet connection to generate and store your Bitcoin private keys, which makes them far less vulnerable to cyber attacks. Here's a key distinction though. A hardware wallet is a physical device used to store your Bitcoin private keys offline, but it's actually a cold storage signing device. The device securely generates and stores your Bitcoin private keys. This private key proves ownership of your Bitcoin and is used to sign transactions when you send Bitcoin. The Bitcoin itself exists on the Bitcoin blockchain, but your private key is what allows you to authorize transactions. By using these specialized devices, you are taking your Bitcoin security to the highest level, ensuring that your wealth is kept safe from online threats. And that is it for this video, guys. Thank you so much for watching and sticking with me until the end. Don't forget to give this video a like if you got value from it, and consider subscribing for more valuable content. If you have any questions, feedback, or even criticism, please write them down below in the comment section and I'll make sure to reply to every single one of you. Until next time, guys, keep stacking, keep hodling, and remember that a Bitcoin DCA keeps poverty away.